Hey, this is Alex Astley. It's episode 119 of Money Hacks, and today is the first day of a 2-day Federal Reserve Board meeting. You're probably watching this and it's already happened, but the Federal Reserve, Jay Powell, chairman of the Federal Reserve, is meeting with the FOMC to set interest rate policy. And the expectation, and what you probably already know, is that maybe they've cut interest rates for the first time after a 2-year period of raising rates. They set the federal funds rate, which has implications across a lot of different types of investments, debt instruments that impact individuals, consumers, businesses, and so on. Namely, things like your emergency savings, your money market funds are going to be driven by the federal funds rate. And while not directly, longer term interest rates, like mortgage rates, are also indirectly driven by the federal funds rate. And so the 30-year fixed rate mortgage, as we stand in the middle of September, has already started to come down from those recent highs that we saw earlier in this year, last fall. Right now, the average 30-year fixed mortgage is somewhere around 6.25 to 6.5%. For some individuals over the last 5 or 6 years, that seems like a high interest rate, but for those who know historically, or those who are buying their houses back 20, 30, or 40 years ago, this is kind of in the normalized range. Now, this leads to a question we've been getting from a lot of investors: is now a good time to buy a house? Well, I know interest rates are still on the higher end of where they've been in the last few years, but should I wait for rates to come down, or are prices going to go higher as rates come down? What's the perfect sort of period where I should buy a house? And that's a tricky question. There's not a great answer for that, because there is, this ebb and flow right now. While interest rates are a little higher, home prices have come down. They've not really come down, but they've stabilized a little bit. If we do see rates start to come down, perhaps it drives more buyers into the market, creating more competition to buy houses, and therefore perhaps pushing home prices higher. But there are a lot of hypotheses, a lot of variables that go into that. So instead, what we talk to investors about are the components of your financial picture that you control, that really would be the metrics to look at, to check when it's the right time to buy a house. And so the first one is ensuring that you are in a position where you have enough money set aside for the down payment, closing costs, moving expenses, or any repairs that you need to do. And then you're still going to have money set aside in a rainy day fund or an emergency fund following the purchase of the house. So that's one piece, ensuring that you've got that in place. The other is going through an analysis of your financial picture, your cash flow, and feeling comfortable that when you buy a place, your monthly mortgage fits into your monthly spending plan, meaning that it's not going to exceed 30 or maybe 40% on the top end of your monthly take-home pay. Those are two really important criteria that we think should be reviewed and checked off before you get into the market of buying a place. And the third one is feeling comfortable and confident that you're going to be able to live in this property for 7, 8+ years before there's a need to move or sell it for whatever reason. So those are the things that I think I would rather focus on than trying to time the interest rate environment and time the housing market perfectly. Those things are always going to be fluctuating, and it's almost impossible to predict the exact right time to buy a house, aside from knowing when it's something that aligns with your financial picture, your goals, needs, and wants. So hope this video is helpful and gives you a little bit of an idea of what's happening in the current interest rate environment and what that means for those who are interested in getting into the real estate home buying process. Thanks, and we'll see you next time.